The best trade I ever made? I didn't take it. Not because I missed it, not because I was distracted, but because I chose not to take it. And that decision, doing absolutely nothing, ended up saving me more money than many profitable trades I've made. That might sound strange. After all, trading is supposed to be about taking trades, buying, selling, entering positions, capturing moves. But over time, you begin to realize something surprising about the markets. Some of the most profitable decisions you will ever make as a trader involve not trading at all, doing nothing, waiting, letting the market move without you. And if that sounds frustrating or even counterintuitive, it's because trading forces you to rethink something fundamental. You must redefine what work actually means. Redefining work as a trader. In almost every other profession, work is visible. It's active. It's measurable. A carpenter works by building furniture. A writer works by writing words. A salesperson works by making calls and closing deals. The effort is obvious. You can point to it. You can see the output. The connection between effort and results feels clear and satisfying. But trading is different. The real work of trading is often invisible. It's quiet. It's internal. A professional trader might sit in front of the market for 40 hours in a week and take only 2 or 3 trades. To someone looking over their shoulder, it might look like they're doing almost nothing. They're not frantically clicking buttons. They're not constantly jumping in and out of positions. They're simply watching, observing, thinking, preparing, and then, occasionally, executing. The work isn't in the trading. The work is in the waiting. The psychological conflict. This creates a huge psychological conflict, especially for people who come from high-performance careers, lawyers, entrepreneurs, sales professionals, executives, people who are used to their effort producing immediate and visible results. Work harder, get more results. Make more calls, close more deals. Put in more hours, achieve more success. This formula works almost everywhere, except in trading. In trading, more activity often leads to worse results. The trader who makes 50 trades a day often underperforms the trader who makes 3. The person constantly scanning charts and chasing moves often loses money, while the trader quietly waiting for a single high-probability opportunity builds consistent returns. That's the paradox. The most profitable traders are often the ones who trade the least. The invisible work. Imagine this scenario. You spend 5 hours watching charts. You analyze price action. You monitor key levels. You track volume and market structure. You stay mentally focused and ready. And during those 5 hours, you take 0 trades. From the outside, it looks like you did nothing. But from the perspective of a professional trader, you did everything right. You protected your capital. You avoided low-probability setups. You maintained discipline. You resisted the urge to force trades that weren't there. That is the real work of trading. Not the clicking of the mouse, but the hundreds of times you didn't click the mouse when you wanted to. Why most traders struggle with this? This is exactly why so many traders burn out. They sit in front of the screen for hours and start to feel guilty. They feel like they're not being productive. They imagine other traders making dozens of trades and assume those traders must be making more money. So they start forcing trades. They start lowering their standards. They start chasing movement instead of waiting for opportunity. And that's when the losses begin. Redefining work as a trader means accepting a strange truth. A day with 0 trades can still be a successful day. Watching the market without trading is still trading. Patience is not passive. Patience is productive. The dangerous lessons life taught you. Here's the uncomfortable truth. Almost everything that made you successful in life can destroy your trading account. From the time you were a child, you were taught to take action. Do your homework. Practice harder. Make things happen. Winners don't wait. They create opportunities. The early bird gets the worm. Fortune favors the bold. In school, the kid who sat quietly and did nothing was considered lazy. In sports, the player who hesitated was left behind. In business, the entrepreneur who moved slowly was outpaced by competitors. For decades, your brain has been trained to associate action with success. And that training served you well, until you entered the markets. Trading breaks the rule. In most areas of life, there's a clear relationship between effort and results. Work out more, get fitter. Practice more, improve faster. Work harder, grow your business. More action equals more progress. But trading breaks that rule. In trading, more action often creates more mistakes, more trades, more commissions, more emotional decisions, more opportunities to lose money. The trader who trades constantly often destroys their edge, while the trader who waits patiently preserves it. That's the paradox. The most profitable traders are often the ones who trade the least. The Cougar Principle. To understand patience, let's talk about one of nature's most effective hunters, the mountain cougar.
If you watched a cougar hunt, you might think it's the laziest predator on Earth. While lions chase prey across open plains and wolves run in coordinated packs, the cougar often does something very different. It climbs a tree or sits quietly on a cliff overlooking a trail. And then it waits, sometimes for hours, sometimes for an entire day. To a casual observer, it might look like the cougar isn't hunting at all, but that's not true. It's hunting with incredible focus. The cougar studies the environment. It understands the patterns of the forest. It knows where deer travel. It positions itself exactly where those paths intersect. Then it waits for the opportunity to come to it. And when that moment arrives, it strikes. Fast, precise, decisive. One clean move. The most important part of the cougar's strategy. But here's the most important part. If the first strike fails, the cougar doesn't chase, it doesn't panic, it doesn't waste energy on a low-probability pursuit. It simply climbs back to its perch and waits again. No frustration, no forcing the situation, just patience. This is exactly how successful traders operate. They wait. They strike when the conditions are right. And if the trade fails, they accept the loss and return to waiting. The cougar isn't lazy, it's efficient. The 3 traits of the patient trader. If you want to trade like the cougar, you need 3 mental qualities: discipline, patience, clarity. Discipline means following your plan when every impulse tells you to break it. Patience means being ready to act while remaining comfortable doing nothing. Clarity means seeing the market objectively, without emotional distortion. The patient trader is not bored. They're alert, focused, prepared. The time between trades is not wasted. It's part of the process. The shift from certainty to probability. In most areas of life, doing the right thing produces the right result. Study hard, pass the exam. Practice daily, improve your skills. Follow the instructions, succeed. But trading doesn't work that way. In trading, you can do everything right and still lose. You can take a perfect setup, manage your risk flawlessly, execute your strategy exactly as planned, and still get stopped out. That's not failure, that's probability. Sometimes randomness wins, and sometimes the opposite happens. You can break every rule and still make money. Your brain will want to call that success, but it isn't. It's luck. Why process matters more than outcomes. Professional traders understand that individual trades don't matter. Every trade is simply one data point in a large statistical sample. What matters is the process. Did you follow your rules? Did you manage your risk? Did you wait for the right setup? If the answer is yes, it was a good trade, even if it lost money. Losses are not mistakes. They're simply the cost of doing business. The paradox of trading less. Here's one of the strangest truths about trading. Often, the less you trade, the more money you make. When you take fewer trades, several powerful things happen. First, you preserve your edge. You only act on the highest quality opportunities. Second, you reduce costs. Every trade involves spreads, commissions, and slippage. Third, you protect your mental energy. Overtrading drains focus and leads to emotional mistakes. Professional traders know their edge comes from selectivity. They're extremely picky. They pass on dozens of opportunities that don't meet their criteria. They're not trying to trade every day. They're trying to maximize their advantage over time. Your hidden advantage as a retail trader. Interestingly, patience may be the greatest advantage retail traders have. Large institutions have powerful technology. They have research teams. They have sophisticated algorithms. But they also have pressure. Pressure to deploy capital. Pressure to stay active. Pressure to justify their decisions. You don't have that pressure. You can sit in cash. You can wait days, weeks, or months for the perfect opportunity. That freedom is an enormous edge, but only if you use it. The final lesson. At the end of the day, trading rewards a very specific type of person. Not the smartest, not the fastest, not the most aggressive, but the most disciplined. The trader who is comfortable doing nothing until the moment arrives to do something. Because sometimes the best trade you will ever make is the one you never take. And when you finally understand that, you stop chasing the market. You start waiting for it, like the cougar on the mountain, silent, patient, watching, ready. And when the moment comes, you strike.